Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Lynn & Associates with your agriculture update for this August 8th, Tuesday, 2017. And we're about, 2:06, 2:07 p.m. Central Daylight Time. In the grain markets, what you have to remember is that this coming Thursday at 11 in the morning, that's Central Daylight Time, a.m., we're going to get the major USDA supply-demand report. Now, what that's going to do is it's going to also include acreage estimates, so the USDA gets to change what they're estimating the acres to be that was planted: corn, soybeans, cotton, oats. I can go on for everything. Then they're going to give you approximate yields that they're looking at, and then they're going to look down south and see how the crops are doing in South America, and from that the traders have to figure out, is this a bullish or bearish report that they're looking at. Often you get a dramatic price move off this report. So this is not, if you're thinking, well, I'm going to risk a few cents, it could be more than that, because the headline numbers, before you dive in, just take this market over in the algorithm traders. So remember that. Cotton's also included in this, so it's an important commodity as well. What I think we're getting right now is evening up. So the market's begun that process. Today in the energies, we're seeing that we're waiting for a formal statement to come out of OPEC, which I have not yet seen. I would imagine it's about time for that. But they're after certain countries. Kazakhstan's there, UAE, Iraq. These are countries that are not doing what they're supposed to do. Example, Iraq and the UAE. I think they're the second and third largest OPEC members right in that area. They have met the production quota cuts by only 29 and 60%. That's not meeting it. I think Kazakhstan went up 28,000 barrels. Ecuador has said it's not going to do any more of it. So they got their hands full, and we'll see what it means, but hasn't come out yet. In the soybean market for the week, we're up 13 3/4 cents. Had a bounce, an inside week, and that won't last that way. I think you're going to come out of that come Thursday right after the report, but we'll see. I may be wrong, but that's my own guess. In looking at an area chart of closes, and this is a daily area chart, the low close we had a couple of days ago at 956 3/4, we bounced away, and we're up roughly 17 cents from that, so that's a good little bounce. When you take a look at the down thrust on a daily bar chart, you've gone from 1047 to 955.5. I'm leaving this on the chart temporarily. Normally I'd pull this all down, but after that report, is this going to be a target, or is that something we're just not going to visit again? I wish I could tell you. I truly don't know. When we take a look at the swing line study, while the market rallied nicely today, it still didn't get through the 981 level. So even on this bounce, you still have left the pattern of lower highs, lower lows, which is a continuation of the bear pattern, and traders will probably jump on the market on the downside if you take out today's lows and not take out the highs, thinking, okay, the market failed again here and it might be dropping in front of the report. We have gotten up and over the 100-day moving average of closes, and as I said, if you can get over that 981 level, you might be able to get a run to the 18-day average at 994 3/4. You also bounced away from the lower Bollinger Band. Remember, under a Bollinger Band or over it, the market only spends roughly 5% of its time that way. That doesn't mean you can't just run like you did back here, and I'm only showing part of that, but it ran rather dramatic to the upside. More times than not, though, you get patterns like this. You'll hit the market, you might come a bit down with it, and then you turn away from it. This was a rather dramatic run, and you have the ability for one of those dramatic runs when you get this August USDA report. When we look at momentum, you still have an embedded market. Now let's count. As you can see, both numbers are under 20 here. So we'll count this. I'll just turn this way. That's day 1, 2, 3. You got your 3 days. You didn't have that coming in. So the rally today, if there were no USDA report, is what traders that I'm saying look for when they get an embedded reading, and they're looking for the market to drop again. If it can drop, the first support might be 64 and a quarter, second support, the 53. Lose the embedded reading, get the red line to close over 20, 994 and 3/4 comes into play. So it gets very interesting right here. In the Dees soy meal, the market has an embedded reading. All it did is rally back to the 100-day average, run into the resistance. Here too, if you take out today's lows tomorrow, I think the bears will want to pounce on that market. So we'll see if that happens. Soybean oil was able to get back up and over the 18-day average, negating its downtrend bias. The word is bias, but not the actual trend, because you still have the pattern of lower highs and lower lows. So I look at that. If the market gets back under 34.16, the bears will regain control. Right now, they've lost temporary control of the market in a market condition that is oversold with the 29 reading in the slow stochastic. In the corn market, when you lost the embedded reading, let's go to that so you get to see how this works. Here you have a market that's got the embedded reading. The K and the D lines, the blue and the red, are both going sideways for minimum of 3 days under 20. The market loses that reading. The goal is, on that rally, the market to get back to the 18-day average of closes. It did it all in the same day, or yes, 387 high here. Today the market extends the rally, couldn't quite get to the 100-day average, and gets an outside day down. So now you have an interesting situation because, in theory, what you have here is a higher high, a lower low, an oversold market with a reversal that has put the bias back down, but momentum's oversold. You talk about a confusing chart. This is a confusing chart. The wheat market is not confusing. It's got its embedded reading. It's had the pattern of lower highs, lower lows. It certainly looks like it's set to go down if it's going to break here to the 471 level, the lower Bollinger Band. Let's talk if the market gets a rally. So what? The resistance is still the 506 and a quarter area. And if you keep the embedded reading, and it's really well embedded at this point with single-digit numbers, 8 and 7, you're going to have to get something dramatic to get it out of that, which could be the report on Thursday. I don't know. It would have to be bullish to do that, by the way. In the sugar, you went down today to 1375. You've got, if you take a look at the market, it closed at 78. It just missed hitting the lower Bollinger Band by 5 points, and it's oversold. When you get a situation like this, do you wait for the actual Bollinger Band to be hit because you just missed it yesterday and today? The answer is you don't have to. You know, you're in that ballpark. A lot of trading isn't just about hitting a number. It's a zone. And when you're within points like that, you know, what if the market's up 20 in the morning? You won't be so happy with yourself. Coffee market. What's driving the market is the grades of coffee that they're finding, and they're not good right now. So the chart people, they're paying up because what's going in is the harvest has come in, and what's available on the open market is causing prices to rally. The chart pattern is one of higher lows, higher highs with an embedded reading. It hits the upper Bollinger Band, just backs away from it, and then goes back up. It's still very bullish. What else on this chart was a big setup? Let's go here, right to this day. This was last Thursday. I want you to look at the red and the green. 134.70 under 135.37. Now you get the 18-day over the 100. Normally that means whatever you're here, you're going to make a new high. That is the goal of when you get a bullish crossover. Doesn't mean it can't go higher than that, but you tell me what's been going on. So you got your bullish crossover with the embedded reading into the upper Bollinger Band that happened to be a higher number. So that trade was one of those that would have worked out. In the cocoa market, you've lost the momentum on the upside. You have a market that's trying to drift down. You've got a pattern of lower highs and lower lows. Very difficult to do anything with that when you're over the 18-day average. And you've had a bullish crossover. Let me show this one. Yesterday, both numbers were identical. Today, you've got the 18 over that. So in theory, what this is saying is if it's going to stay a legit number, you should be going up for these highs. We'll see if that unfolds together. Close back under these numbers, well, then you got to say you got a false breakout. And you would see that with this market trying to cross back down. So it's a good one for you to study and learn from. In the cotton market, you have a fully embedded reading up to the upper Bollinger Band, higher lows, higher highs. The target, 71.27 to 71.74. The upper Bollinger Band and the 18-day average of closes. Again, you'd have to be going through the report to really get any more out of that come Thursday. I don't know. I've got my own theories on not going into the danger zone, as I call it. In the cattle market, we've had that one rally, got up to the 18-day average. You got new lows on this move. Still bearish in bias. I'm waiting to see if the 18-day average crosses under the 100. I think it's going to, and I think that's going to add to the negative tone in this market. In the feeder cattle market, you fell back today to support at the 100-day average, and it was able to grab some there. The pattern is interesting in that if you don't take out today's lows and you go through today's highs tomorrow, you could actually end up with the swing line turning up with higher lows, higher highs, momentum pointing down and bias down. In other words, the chart not good. And because you're not trending, you just have fallen here without a real trend out of the swing line and you're oversold, I think there's probably better things to pay attention to. Was that in hogs is a question too. You came down pretty hard here, and now you've rallied roughly from 64.12 up to today's high of 68.90, and suddenly you're pulling back. At the same time, if you'll take a look here, you're going to get a bearish crossover. The 18-day average gets under the 100, but prices haven't yet closed under these numbers. So that is one of those crossovers where I just throw them off the chart. They don't matter to me. This rally, even if it gets back under it, you've had your bearish crossover, but it took place when the market was actually higher than those averages, and the crossover was down. It's just one of those weird, rare things that you see on a chart, but it's there. I just pay no attention to it. Momentum is still pointing up. You have a higher high, lower low. Don't know what to do with that. And I'll say that I think that on the pullback support it's likely to be uncovered in those two areas, but you need to get a pattern of a trend from the higher high, higher low program that you don't have just yet. So let's talk about what I'll be doing. I'm going to be writing come Thursday morning about these crop reports and what I think. I'm going to have my phone updates out. You're going to find them. Not only can you get it from me, but you can get our firm's market research as well. And believe me, folks, we are a big-time grain firm. This firm is well known, Lynn, for its grain research. And if you're a grain trader, cotton, any of those, you want to get this report right away. I also will review in the mornings before the report. I always do this at about 8:30 in the morning. I review about 40 charts at a time, and I show you buy, sell. Here's what I think the pros are doing. If you're going to take a shot in the market, you can sell it here, be out if you lose the embedded reading or whatever. So I go through all that, and this is what the writing would look like. If you haven't tried this, I want you to try it. Just give us a call. 866-973-2077. No, I don't want a credit card or anything like that. I'll put it in your hands if you haven't tried it before. If you've tried it before, you know what it's about. You're either subscribing or maybe it wasn't for you. Here's how you get it. You can go to our website, sign up for the free offer. You can always call us to subscribe if you want. You can click up here. It says click here. If you're watching us on YouTube, it's actually going to just be an icon. Click that icon. It'll take you right to the sign-up form. And under us on a number of websites, it says click here for Ira's free offers. I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow.